Good morning, good afternoon. I'm Jaxi Ng, the Financial Advisory Leader for the Asia Pacific region in Deloitte. I'm your host for the session today. I'm so happy to see so many of you dialing in from all corners of Asia Pac region today. A warm welcome to our Deloitte debrief session on M&A markets. I'm joined by my fellow global leaders, Ian Macmillan, the Managing Partner for Global M&A Services, and Siram Prakash, who is the Global Lead for our M&A Insights and Ideation. We also have Maggie, who leads Taiwan M&A and FA. She's based in Taipei. And for Ian and Siram, thank you for waking up so early and dialing in from London. So we have a whole series of different topics in M&A to share with you. But before I start, I would like to encourage all of you to use the Q&A box, which is at the bottom right of the screen, to submit any questions, observations, comments you have. And we'll have some time at the end of the sessions to answer the questions you have. If not, then we'll definitely come back through emails. And if you require an attendance record for the event, for the CPE cert, please do stay watching for 50 minutes and we'll send you the cert to confirm that attendance. Right, let's start. So in the last few years, M&A has emerged as an integral part of the corporate growth story. However, looking ahead, CEOs are expected to deliver results in an era of relatively more challenging, more volatile environment with rising financing costs and there's a continued geopolitical tension and there's business model and supply chain disruption, not to mention inflation, AI, tech disruptions, and now the ESG compliance expectations is increasing on every one of us. So reflecting on these challenges, we in Deloitte has recently released a report called The Path to Thrive, in which we analyze more than 40 years of M&A data to come up with fresh perspectives on M&A strategies for all of you here. So in this session, we'll share the perspective and insights on how organizations should strategically use M&A to seize new growth and to add value. So in the environment today, we need to really rely on M&A as both defensive and also offensive strategies. I have the pleasure to now hand over to our global M&A leader, Ian Macmillan. Ian, over to you.
Good afternoon and good evening to those of you where it's evening. It's early in the morning here and we have a rare sunny day in London. And apologies that the internet where I am means that my video connection is a little bit unstable, so I'm just doing this on voiceover. I'll see if I can join you with a picture later during the day. So Jaxi, I'm the Deloitte's global leader for M&A services across Deloitte, and I am delighted to join everyone today. So if we just comment quickly around the overall outlook at the moment. So clearly the macroeconomic backdrop is challenging. But there are some initial signs that point to a gradual recovery of the international economic environment. Inflation finally seems to have peaked in most economies, even here in the UK, and consumer confidence indices are gradually on the rise, whilst the global recession fears certainly appear to be easing. So the knock-on effects of these green shoots in the M&A markets have started to slowly emerge. And indeed, $1.2 trillion worth of activity has been announced so far. And indeed, Q2 this year saw a 17% uptick on the previous quarter, which itself was an uptick on the quarter before that. So we're actually seeing a recovery from the downturn that started around this time last year. So we continue to therefore see companies beginning to start to adapt to this lower growth environment. And this is also evidenced by the re-emergence on some of the very largest deals. Indeed, $236 billion worth of those deals have been announced this year so far. And in particular, that has been in the energy and industrial sectors, the big pharma sectors, and I'll comment later, even a slight return of the major private equity funds. Clearly, the biggest event in many ways this year from a financial markets perspective was the recent mini banking crisis in the US and Europe. And this did see a very significant retreat from traditional lenders from the M&A market. But equally, it provided opportunities for private lenders to take advantage of this market disruption and dislocation and to bridge that financing gap, providing capital at terms that were not otherwise available. And with assets under management of an estimated $1.5 trillion, these private lenders have now emerged as a major force, and we believe will continue to be very influential in M&A markets going forward. So I touched on private equity earlier, and as we all know, they are a major force in M&A markets, notwithstanding the current debt environment. And of course, they have nearly $2.5 trillion worth of dry powder. So we do expect them to take advantage of significant drops in valuation in certain sectors and in certain geographies across the world. And we've begun to see that. I think there was a $19 billion private equity deal in the US just a couple of weeks ago now. So final observation on this slide is that capital allocation is perhaps the biggest issue that's driving these choices in the context of M&A. And when we surveyed our clients around this, we saw that 75% of them continue to highlight that growth was the key priority for them around capital allocation decisions. And therefore, growth rather than defensive options, we expect to be, despite these challenging conditions, very much on our clients' agenda. So if we perhaps go to the next slide now, please. So just looking a little bit about the emerging regional variations across M&A markets. Clearly, the largest market is North America, and there, which is on the top left, these M&A activities have remained reasonably steady this year, largely, as I've mentioned earlier, in a way around the significant activity in the large pharma and energy and utility sectors. As you probably have seen, US GDP grew modestly by 2.4% in the last quarter, and we actually anticipate a stronger second half of this year in North America. In Europe, Q2 actually saw the downward trend stemmed and indeed a sharp rebound, albeit this was largely on the back of some very significant strong cross-border deal flow in both consumer and industrial sectors in the Netherlands and France, although we have also seen a slight pickup in private equity deals in the UK. In Asia Pacific, and I know Jack C will go into this in more detail, M&A deal flow has been relatively subdued, but the long-term potential remains very robust and indeed received nearly $70 billion worth of inbound M&A investment to highlight that growth potential. And just in terms of that cross-border element, and I know we'll pick up this again a bit later, it is always noteworthy just how pivotal cross-border opportunities are to the M&A market. So around 34% of all M&A is represented by cross-border deals between companies in different geographies. And in many ways, those attractive valuations and dislocations, particularly in Europe, is driving some of that activity. So nearly 100 billion of inbound activity into Europe this way this year so far, particularly coming from the US. So if we just go to my final slide, and Jack C, I think, talked about this a little bit in the earlier comments. And this is around the 40-year outlook. So we started this exercise last year, and it was partly for us to try and get a grip on how long any downturn in M&A markets might last. But it is very interesting when you look back over 40 years that the M&A downturn and expansion cycles have actually, whilst being volatile, they have also become incredibly resilient. So the blue chart and the orange is the size of total M&A value by year, and the grey boxes are where we're highlighting where there's periods of economic uncertainty. So you can see how there is a gentle decline, or in some places a significant decline in economic uncertainty. But you can also hopefully see that very quickly after that uncertainty subsides, how quickly M&A activities recover. And of course, these downturn conditions also prevent very unique M&A opportunities. Indeed, our analysis shows that many of the most value-enhancing deals were done in these periods of uncertainty. You can see that most clearly when you look at some of the returns by vintages of the private equity funds. So we really see our clients remaining in a very, very alert sense of preparedness to take advantage of those types of strategic moves when opportunities arise and create their own momentum. So with that, I'd like to pass over to Sriram now, and I think we're going to have our first polling questions for him. Over to you.
Thank you, Ian. Let me introduce the first polling question. I'll read out the question. How does the current environment impact your interest to do deals over the next 12 months? You have some options in front of you, so please go ahead and take the poll. Jaxie?
While we're waiting for our audience to answer the poll questions, hey Yan, it'll be interesting to find out when you have done a similar debrief for our clients in US and in Europe, what can you tell us about the sentiments in these regions?
Yeah, thanks, Jaxie. This is, I think, a great question, actually, and it's one of the lovely things about being able to have a webinar like this, where we're able to test the temperature across different regions. So on that webinar, where we had, I think, 2,000 to 3,000 clients on the call, that top box, which again appears to be the dominant response here, was even more dominant, actually. So nearly 3/4 of the poll respondents highlighting that they saw M&A as being an opportunity to accelerate and drive growth. We also asked them a little bit about what their motives for those deals were going to be. And a couple of things came up. So that was firstly around potentially seeing attractive valuation opportunities and disconnections arise. And of course, many, as indeed we originally saw at the time of the financial crisis, 15 years ago now, many businesses have actually performed very well and indeed have very robust balance sheets with significant levels of cash. So looking at how they deploy that. And then if we tie that back to some of my earlier comments, the dollar, of course, has been incredibly resilient and often is in these periods of uncertainty, notwithstanding yesterday's kind of announcements around the US debt outlook. So what we have seen are particularly US acquirers looking internationally, and I mentioned earlier about the impact there around some of their activities buying into Europe. So I think, Jaxie, those would be sort of the key highlights from our session. I don't know if you want to maybe reflect upon that as some of those responses now come through. I can see, for example, nearly 50% are talking about how the key opportunity is to adapt and do more opportunistic deals, for example.
Yeah, I think it's pretty much right. We can definitely see more companies and private equities would like to adapt to the current challenging environment and in fact use M&A to be the engine of growth. We do have a few other questions coming into the Q&A chat box, but we'll take it later. Over to you, Sriram. All right, so this, yeah. I think it's interesting that we see how the poll results are. The answers are pretty similar in AP as what we see in other regions. And now let's just focus in our region in Asia Pacific. This region is definitely exciting because it's proving to be a rare bright spot in the world. The IMF has just projected that our region here in Asia Pac is growing between 4 to 5% in 2024. So what does that mean? It really means that our region could potentially contribute to an astonishing almost 70% of the whole global growth in the next 12-24 months. And this is very largely due to some expectation on the rebound of economies, more so in China and India. However, the optimism is yet to fully spill over to M&A markets. As you could see here on the chart, right? In fact, both China and India markets, the M&As have not been underperforming this year. So far this year, there's about 300 over billion worth of deals has been announced. Not all closed yet, but the most active markets have been in Japan, Australia, and Southeast Asia. So Japanese companies, the Congress, are still pretty much looking to do M&A, especially more so global markets in the US, Canada, Europe. And in terms of sectors, we do see that there's a strong rebound on consumer business, worth of close to 90 billion deals. That is huge, coming out from the pandemic. And also we see that there's other sectors like the light of energy, and also that is related to transition from brown to green, industrial sectors in certain pockets of the sectors in the manufacturing industrial part. We also see that that's going to be the mainstay for our M&A markets in Asia. Obviously, we mentioned just now there's been a lot more in private equity because the dry powder is still high in this region. So in summary, I see that Asia Pacific region will continue its recovery in economies side of it as well as M&A. And we're likely to see really there's a rebound back on M&A markets, more so in the health sector and in selected markets in the coming months. Maggie, you'll share a bit more of the insights.
Yeah, I think there are several emerging things that will have a significant impact on the Asia Pacific region. Firstly, we are observing a sharp increase in the intra-regional cross-border M&A activities within the Asia Pacific region. The prospects of faster economic recovery in this region are attracting more regional investments, and we expect this trend to continue in the coming months. Singapore, China, and Japan were the most active investors within the region this year. The geopolitical tension between US and China is also leading to Chinese companies investing more within the region. Second, there was a sharp decline in global M&A deal multiples in 2022, when valuation fell to their lowest in a decade. This year, valuation have started to rise, in part due to the greater use of cash by acquirers to tempt the sellers. However, the deal multiples are still well below the peak, which is 2021, and there are plenty of attractive deal opportunities in the market. Globally, the corporate sectors is sitting on over 2.5 trillion of cash reserve, and we expect them to start using some of those reserves to acquire the target at a bargain. Next page, please. So we see the shareholder activism is making a strong comeback, and the Asia Pacific region accounts for 22 of all global actions. Japan and Korea were overwhelmingly the most targeted countries in this region. In addition to the traditional demands of MMA and the breakups, the activists have started focusing on ESG themes of climate and sustainability as well. Companies need to anticipate this trend and proactively draw plans to engage long before activists start taking stakes. And as mentioned earlier, private equity is fast becoming a major feature of Asian MMA markets. So far, this year, PE firms accounts for 110 billion worth of deals, an incredible 35% of total Asian MMA market. This year, the PE firms have been highly active in Japan, Southeast Asia, and Korea, where they have been primarily acquiring assets in industrial, energy, and consumer business sectors. We expect the PE sector to remain highly selective in their deals as they need to identify new value creation opportunities in different market conditions. Now, that's over to Siram to introduce the second of our polling questions.
Thank you, Maggie. I'll introduce the second of our polling question. What are the major factors that will influence your M&A strategies and decisions? There are a few options, so please start the poll. And while we are waiting for the results, Maggie, thank you, and Jaxi for this very interesting presentation on Asia. May I ask, from the discussions you're having with your clients, what should they do to position themselves to take advantage of this fast recovery and growth in Asia, which is expected to come?
Yeah. I think even though Asia is growing, but it's no longer the double-digit growth, right, from the previous decade. So some company need to be more proactively hunt for MMA opportunities, paying close attention to the micro-regional trends that are driving growth within the pocket of Asia. For instance, the trade tensions between the US and China are creating new supply chain opportunities for countries like Vietnam and India. We see lots of transactions happening right now.
That's so true, Maggie. We see more opportunities in the region. And I also reckon that companies need to revamp their M&A strategies, looking at how we can structure the deal a lot more creatively, as well as focusing on how post-deal we can create more synergies. That value creation strategies is key to ensure that the deals does deliver the unexpected result or maybe a lot more than what they have planned. So this is the new era that we all need to look at relentlessly, how we can make the value from doing the deals coming up more so in the post-deal era.
And Jaxi, that's so very true. And also what you mentioned, Maggie, because looking at the polling results which are coming through, what is really interesting to me is the number one opportunity is all around growth. So Asia is really translating into a growth story, whereas when we did a similar poll, and as Ian mentioned, in the US and Europe region, it was much more driven by attractive valuations. So I think we are seeing an emergence of a very distinct regional trend here.
Sriram, I'm just noticing one of the questions that's come in around the impact of increasing interest rates on business valuations and the cost of capital. How is that impacting how deals are done, and has there been a significant shift in how those deals are being financed? I mean, you're going to come on actually, I think, to some of the ways in which we're seeing M&A evolve its strategy into things like joint ventures, alliances, even licensing type arrangements, and increasingly, that's the sort of activities of the clients and the deal teams on the call here. On the financing them, I think there are a couple of points I would just highlight, one of which I've referred to already, which is the traditional lenders into particularly larger M&A deals. They did retreat quite a bit. We saw the impact of the Yammer deal. There was a lot of debt trying to wash through the system at the very time that the uncertainty became most complicated. That has now cleared through. So as I mentioned earlier, we had a $19 billion M&A deal, WorldPay, done a couple of weeks ago now. So that has seen a little bit of return, those lenders. But of course, the other people who really stepped up were those alternative lenders, in many cases, the sort of debt arms of the private equity funds. And then the final piece, which has been very interesting, I think, is where people have said and agreed with the existing lenders that they're not going to cause effectively a change of control, triggering a debt refinance. And they've just left the debt in place of the underlying business. And I think that's been very relevant where that's been achievable for private equity deals. So they've been effectively equity-only transactions. So there's a lot of, as you can imagine, and no better audience than this to realize that M&A deal doers are incredibly creative. And whilst it has been a reasonably complex market to navigate those liquidity challenges, for the right deal, I think there has been enough momentum to ensure that things are able to get across the line. Sure, so I'll hand back to you because I know you're going to pick up some of that in terms of the nature of M&A changing in the next section.
Yes, indeed. Thank you. So let's moving on to the next section. What I'll do in this section is to talk a little bit about the research which was mentioned by Jaxi with regards to the Path to Thrive research. First and foremost, when we started this research back in late last year, the world was already changing. So we decided, let us do a little more of understanding of how M&A has impacted over the last few crises. So we looked into the crisis of 2008 as well as the recent pandemic crisis, and there was a sharp difference. And what we found, for instance, was back in 2008, there was a sharp decline in M&A when the crisis happened during the downturn. Virtually nobody did deal. Private equity exited the markets. But if you fast forward to the pandemic crisis, even though the market declined dramatically in 2020, they bounced back within 2 quarters. Also, in stark contrast to 2008, private equity firms were one of the driving forces in the market, as Ian mentioned earlier. And all this ensured that 2021 became an all-time record year for M&A. So if we take a step back and see what are the lessons to be learned, I think the first is what we found, as Ian referenced earlier, that when we did some analysis of shareholder returns of the deals which were done during the downturn conditions, they turned out to be some of the most value-enhancing deals. So one key lesson is it's important to stay focused and look out for opportunistic deals in the market. And the second lesson learned is that M&A is now seen as a fundamental part of the corporate response. It's not just about consolidation or growth, because M&A can be used both in defense to preserve value as well as an offense to drive growth. But as my fellow presenters reference, looking ahead, the conditions are vastly different. And thriving in such conditions would be defined by, we think, 2 very distinct capabilities. The one capability is resilience, in which companies need to secure its foundations. And then the second capability is the ability to drive transformative growth, in which companies need to reinvent their business in order to drive market leadership. So what we have done is we have taken these lessons and developed a new M&A framework, which you can see to your right. And in this, we have demonstrated a new set of defensive and offensive M&A strategies that are required to build both resilience as well as drive growth in many aspects of the business. And as Ian referenced, a key point here also is that the nature of M&A is fast changing. It's changing from the traditional buy and sell side to much more innovative inorganic moves such as JVs, partnerships, alliances, and so forth. So I'll go through all of these things in a little more detail in the subsequent slides. Can we move to the next slide, please? Thank you. The current macro geo conditions require all companies in all geographies, large or small, they need to establish resilience at the heart of their business model and their organizational culture as well. So the value drivers of resilience typically includes areas such as pricing, margin improvements, supply chain agility, and many others. And we believe that M&A strategies can play a significant role in all these areas. For instance, one thing companies can do in current market conditions is to take a comprehensive review of all their portfolio and consider whether they should be divesting their non-core assets. I think this is particularly important if you expect, as Maggie mentioned, activists to be on your tail or even regulators to target your company. As you can see from the chart to your right, what we have seen is that in the last few years, there has been fairly strong growth in divestments. And this has also been spurred by private equity sector, which has come as a very strong buyer of these carved out assets. We expect this trend to continue definitely into 2024. Recently, we completed a survey around divestments, and we found 7 out of 10 companies are considering making 2 or more divestments by 2024. So there's plenty of activity to come. But it's not just divestments. I think similar to this, companies also need to consider other strategies which help push resilience into their business model. For example, acquisition of competitors to safeguard their markets and drive more synergy efficiencies. Or perhaps even acquiring their suppliers in order to secure supply chain systems. And we are certainly seeing quite a lot of such acquisitions where companies are acquiring their own suppliers in the semiconductor industry, which is becoming a hotbed in the current geopolitical environment. Moving on to the next slide, please. The second part of the puzzle is around growth, and we think, regardless of what the market conditions, shareholders will expect all CEOs and boards to deliver growth and profits, regardless of what the conditions are. And this means that companies can again use M&A strategically across a number of growth levers. For instance, digital transformation, it could be innovation, it could be market segments to accelerate growth, and so forth. And digital in particular is proving to be one of the most important drivers of M&A. In fact, recently, about 12 months ago, we did a survey of the CEOs of various companies in the world alongside Fortune magazine. And in that survey, we found that 2 out of 3 executives or 2 out of 3 CEOs indicated digital was their number one transformation priority. And in the last few months, we are seeing many examples of companies who are acquiring smaller and nimble digital competitors in order to enhance their own value potential of their products and services. And what this also gives you is an ability to test new things such as digital platforms to push out products directly to the consumers. It's also an ability to test new areas such as, can you turn your product into a service and create a product as a service business model? All these can enable generate new revenue streams. And it was also mentioned in one of the questions, how is ESG coming? And Jaxi also referenced it. We think ESG is one of the most important themes which is going to be in the market. It's a long-term theme and particularly going to be relevant in Asia, because all businesses are expected to demonstrate that they are able to deliver profits with purpose. And what this means is that they need to create their entire business model around and look into the ESG dimension and how they are impacting across these things. And we like to call this as impact investing. And impact investing itself is becoming a dedicated M&A strategy. In fact, as you can see from this chart, in 2022 alone, there was 188 billion spent by corporates to acquire ESG aligned assets. And it has been steadily growing over the last couple of years. And I must stress, when we talk about ESG, we are not just talking about energy and the transition from brown to green renewables. We are seeing a lot of investment from other sectors as well. For example, consumer goods, who are investing in getting the supply chain much more cleaner and sustainable. We are seeing investment in retail in order to reduce the plastics. We are seeing investment in banking sector in order to develop green financing. And of course, certainly a lot of investment by private equity in the industrial segments and chemicals and many others. So ESG is a huge opportunity, particularly in Asia, which is probably the supply basket for the world. Moving on to the next slide, please. The current market dynamics have also necessitated a expansion of the scope of what is traditional M&A, which is all about buying and selling assets, into much more complex collaborative structures such as ecosystem alliances. It could be partnership, it could be joint ventures. But one of the lessons which we have seen from coming from the pandemic is that a lot of the problems, such as clean air, mobility, clean energy, they can't just be solved by one industry. Companies have to go across industries to find collaborative partners. And oftentimes, these collaboration structures are not, as the result, bound by your traditional industries. Instead, you need to find a common purpose, such as future of energy and mobility, find multiple industries, find startups and other ecosystems, and work together. And in the last 12 to 24 months, we are seeing such innovative partnerships, for instance, between automobile manufacturers and media streaming companies in the future of automated vehicles. We are seeing partnerships between telehealth providers and telecom companies, and even insurance companies are coming into these partnerships. We are even seeing partnerships between private equity and companies like Big Pharma, and instead of buying outright assets, they are partnering with private equity in order to turn around assets and then enjoy the upside when that particular asset is listed. So these are not, again, just driven by purely the financial consideration. There is a lot more strategic consideration in some of these partnerships. So we, in fact, think that going forward, every opportunity, every growth opportunity should be considered with the lens of, should you buy? Should you build? Or should you collaborate? And companies need to start thinking about spreading their investments across these distinct buy, build, and collaborate strategies in order to capture the full potential of the growth opportunities which are coming through. The next slide, please. And lastly, it is we cannot understate the importance of the impact of disruptive technologies on the business models of many companies and also markets. Jaxi referenced AI, but that's just one of the many disruptive technologies which are impacting growth. What has also happened in the last few years is the adoption of such technologies is blurring the traditional sector boundaries and leading to convergence of business model across many sectors. And what I mean by this is, for instance, if you take something like climate tech, there you can make a case for investment in climate technologies in from so many different sectors, from be it energy, be it chemical industry, be it the professional, be it the banking industry. They all are investing into some similar technologies, and that means that each can make their own business case in order to drive value using those technologies. M&A, no doubt, is playing a crucial role in the advancement of such disruptive technologies. In fact, one of the most remarkable trends over the last few years is that the non-tech sector has overtaken the traditional technology sector in investment in such disruptive assets. As you can see from the pie chart to your right, in the last couple of years, 63% of the acquisitions of technology assets were done by the non-tech sector. That's truly incredible. And it is spread across so many different disruptions. Of course, uh, within disruption, AI is probably the hottest topic of the year. And as this chart in the below right-hand column shows, that in the past few years, venture investments and M&A into AI has been growing exponentially. Both professional venture capital industry, who were the first to invest in this technology, but now we are seeing a huge amount of strategic investments through corporate venture capital as well as direct investments from corporates into these AI enabled technologies. In fact, in the last 2 years alone, we saw almost 100 billion worth of investment driven into this segment. As mentioned earlier, the disruptive potential of AI is simply enormous. It will impact every sector, every geography. And we are seeing lots and lots of examples of very interesting and innovative investments, but also the partnerships with AI and AI driven companies to test the waters, and so that companies can make bold moves when AI comes into full maturity in the coming years. We move to the next slide, please. So in summary, when we did this study, we wanted to get a sense of how can we create a framework which can be used by every sector or every region and allow companies to start thinking about what are the choices they need to make with regards to growth. What are the strategies they need to adopt? How do they prioritize markets? How do they prioritize customer segments? Where should you play in which markets? But also, what are the assets do you need today, as well as what are the assets of tomorrow? And what are the skills you need today, as well as the skills for tomorrow, in order to win and to transform to become a market leader in the future? That was our aspiration. And using this framework, we have been able to drive many interesting discussions with clients all across, and all the way from helping clients to consider enterprise wide strategic assessment of all their portfolio and their assets, all the way to considering, say, new segments such as ESG and what is the investment potential and how do you use M&A strategically, not just to invest, but also, for example, consider what assets do you need to sell which don't meet the ESG criteria, or assessing impact of disruptions on businesses, on customer segments, and so forth. And what we have also done is come up with a set of very 10 practical questions for companies where they can consider and evaluate their existing moves, but also plan their defensive and offensive M&A in response to how the market is moving. I will now move to the next slide to introduce the next polling question, the last of our polling questions. The question is, what are the M&A strategies that you're likely to pursue over the next 12 months? The options below, please start. So while we are waiting for the poll to come, Ian, I'd like to pose this question to you. As I mentioned, AI is the hottest topic. We are hearing so much from our clients. But how is it expected to impact the M&A process, and what is Deloitte doing to help its clients?
Yeah, thanks, Sriram. Look, I mean, it's clear that any conversation at the moment for the last few months has really been dominated by the outlook around the impact of generative AI, and M&A is exactly the same. But it's quite a complex topic. My favorite author on the subject is a chap called Richard Susskind, who's written a number of very authoritative books on him, and we speak quite a bit with him. I think the reality is it has the potential to transform every aspect of the deal process. That can cover areas from target origination through to execution, post-deal transformation. Fascinating conversations with some of the major tech providers we're having at the moment around how they see some of the applications they're developing. So we are making big investments into that areas, and I know some of you will have seen this before, but one of our early stage AI tools was a development we created around M&A sensing, which helps to identify targets. We're now looking as to areas around how things like digital twins might emerge in the context of M&A to drive simulation and give much more robustness to the outcomes of an M&A activity, as well as I mentioned earlier, some of the big alliance relationships, not just, I'd say, with the big software providers, but also, and particularly relevant for this region, actually, the likes of NVIDIA, and understanding where some of that semiconductor technology is going to emerge. And then, of course, the last piece, and Sriram, I think in different media we've talked about this, is it will increasingly impact the types of deals that people are doing. I think as people realize or want to adjust their business models for something that's more agile around a generative AI environment, that will cause them to think about certain types of deals that they might want to do to bring those types of skills into their business. So I do think it will be a net, in a way, anything that's causing a big change tends to result in significant M&A activities. And in this particular case, it will not just be the underlying nature of those deals, but the way in which some of those things are going to take place. So Sriram, hopefully that covers that, and I'll pass back to you.
Thank you, and that was very informative. And we're seeing the results of the polling question come. It is a very interesting spread, don't you think, Jaxi? Because we are
Yeah.
looking at, um, strengthening market positioning, transforming business models, even new growth categories such as ESG coming through. What is your take on this?
I like the poll results. It covers almost everything, almost on an equal basis, right? So it just shows that this is really a growth region. Our audience here are looking at using M&A to do almost everything that help the companies to be much stronger. It's not just a defensive strategy, but it's really offensive to transform the business model, invest in ESG, AI, Gen, everything that Shriram, you, Yen, and Maggie talked about. A very good result. I would say this reflects what we know about the market here in the region.
Fantastic. And I would say so. And also, if I were to link it back to a similar survey, which we did for US and for Europe, in fact, there was a little more on the defensive side. Definitely the US companies and Europe, they were looking to divest assets. And perhaps that is an opportunity for a lot of Asian companies to do cross-border deals and acquire some really interesting assets and wait for their growth potential. And also the other thing which we also saw, which was slightly different in other markets, was in terms of the new growth categories. I think there was a slightly higher percentage of responses with regards to JVs and alliances. And again, this is understandable because alliances, JVs has been a lot more mature in the markets of US and in Europe, and we are sure that this should start also coming through in the coming years. Jaxi,
Yeah,
I'd like to pass. Yeah, please go on.
No, I would love to get Yen's observations on this poll results from our region here in APAC. Yen, what do you think?
Yeah, look, I'm actually also looking at the because you can't see me, so I'm also looking at the questions coming in. I think there's a couple of interesting observations from the audience here around, AP is a really big market, right? And I would say that doesn't necessarily mean every market is homogeneous in terms of its outlook from the economic uncertainty that's taking place, nor indeed is every sector. So what that does create are those dislocations and valuation arbitrage opportunities, which I kind of alluded to earlier in the context of cross-border activity. But I'll just link it back a little bit to the previous question that Sriram posed me around the impact of generative AI. One of the other things to watch out for, of course, is that whenever there's a significant change like this, and I am, by the way, a big believer that this is going to cause a big change. We were at I think Jaxi and I were at a panel with Barack Obama a couple of months ago, and he talked about, what's the corollary of generative AI, and he said, well, I think it's bigger than the iPhone, but we talk about it as being a bit like electricity. So we definitely see it as being very significant, but often when you get a big significant change, there's an over-indexation, and some of the big private equity funds that I was talking to at Super Return a couple of months ago now, they did highlight that many of the best deals they've done was when everyone thought a particular thing was completely out of fashion, things like Dell computers. And in reality, there's fundamentals about how society will continue to operate, even when there's big levels of change out there. So I think that disparity of responses reflects just the fact that in each of these different areas, depending upon where you sit in a geography or an industry, you might well look at things slightly differently. But there are definitely now pieces to the equation. ESG would be another one, where people have got to adapt their deal strategies to take account of the impact around climate and sustainability to their business model. So the answers actually, I think, in no small measure reflect that the audience we have here and the fact that everyone has a slightly different nuance depending upon where they sit.
Yeah, that was exactly the comment put in by one of our audience here. Spot on. Jerome, any more observations on this, or Maggie? I think you're on mute.
Yep. I think
Sorry. Maggie, if I may, if I'd like to bring you on as well on this one, because one of the audience questions was around something which you touched upon around valuation, possibility deals around China plus one strategy, and which part of Asia would be more attractive to overseas buyers. Is there any thoughts you have in this matter?
Yeah, I think, like Ian said, Asia Pac is a very wide region, and you will see some um, valuation arbitration, and because of the China plus one or Taiwan plus one strategy, so you will see more intra-region activities. Say, for example, I see more corporates looking to expand or investment opportunities in Vietnam and India, because they think that they want to move their manufacturing location to have more diversity in the region. And you will see that, but it depends from sector to sector, right? Like PCB, they probably will pick Thailand as a good location. So it depends on the support or the sectors clustering in that country, and it will create different opportunity within the Asia.
Thank you. Jaxie, over to you for the final question answer session, which is very much continuing what we're doing.
Yeah, and thanks so much, right, Jens, Ram, and Maggie. This is really insightful, and we continue to see questions coming in. So please, if you have any other questions or observation, this is the time that we'll open up the forums to respond to the questions posed by all of you. Maybe I can start off with Maggie. Maggie, the big question mark is that with the weakening of Japanese yen, do you see that the appetite of the Japanese companies for doing M&A outside Japan to reduce based on your experience and observations?
Thank you, Jaxie. In fact, we do have a big Japanese service team in Taiwan, because we see more and more Japan investments recently. It's not because of the weakening of yen will impact on their investment decision. I think as I mentioned earlier, company keep looking for growth opportunities in this region, right? And so that's why they continue doing M&A, but they become more selective. So they want to identify the right investment target with appropriate growth opportunity with the relevancies to their future growth alignment. So I think we still see more and more investment interest from the Japan investors. And I think we will see some potential synergy upsides for the business collaboration.
Yeah, that's very aligned. I do see that the Japanese companies continue to be very aggressive to expand while M&A. I also agree that I think the quality of the assets, the target company itself, we have to make sure that we put up the best of the companies for the best valuation in a tough market like this. And this kind of tie into the next questions from our audience. I'll pose this to Yan and maybe Suram just chip in. It says that, can you please comment, the experts here in the panel, how do you balance the temptation of growing through M&A based on the existing ecosystem versus building your core resilience to really be better set up for M&A deals? Maybe, Yan, I will start off with you.
Yeah, look, these are really great questions, by the way. I think what the question is getting at here is, with the level of change that is out there at the moment and that broader ecosystem into which businesses now want to interface, and things like technology and climate, for example, fall into that category. But also the need to protect your core. How do you balance those two things? Now, we've actually developed, and I think Sriram went through this a little bit earlier on, a couple of pieces around this. So firstly, I think any business does need to think about that broader ecosystem in which it appears, and that includes us, right? I mean, we are very aware of the fact that for Deloitte, notwithstanding the fact that the world's biggest professional services firm, some of the most agile responses to things like the M&A market is taking place by by relative new entrants to the market, things like data room providers and stuff like that. So I think you have to have a very clear strategy around how you're going to use M&A into that broader ecosystem value chain, because otherwise you could find yourself quite disrupted. But equally, and this is why I think all of our M&A teams, even when the M&A markets are not so busy, I think it's really important that resilience, the underlying robustness of your business models is underpinned through particularly a sort of time of economic uncertainty that we're looking at. So shoring up areas around your supply chain, that obviously ties in, I think, to some of the geopolitics questions, which kind of you can't escape in the world at the moment. So that's where our sort of offensive and defensive constructs, which we actually came up with originally in the construct of the post-COVID response, or the COVID response to M&A, but they're actually incredibly true and the right kind of framing today. So I actually think, I mean, every organization, a bit like the response to the other question, every organization is going to be a bit different, but I think it would be dangerous to put all of your eggs, if you like, into one basket. So I think you do need to have, if you like, a disruptive M&A strategy for how you're going to interface into that broader ecosystem, as well as a kind of core resilience. And finally to that, I think people, you know, and you flagged, I think, in the presentation earlier, the rise of activists. And I remember being in Tokyo a few years ago, and we weren't, you know, some of the commentators weren't sure if they were going to be as prevalent over there. They clearly are now. I think that is causing people to just ask themselves, actually, are we the right owner of certain parts of our business? And when we think about what that business is in the future, that kind of portfolio, you know, active portfolio management, looking about capital returns, about different businesses, I think that's exactly the sort of things that people need to be on the guard for at the moment, because those are the sorts of questions that activists are posing. But Shreyam, I'll pass on to you, because I probably said too much there, and you'll have far more educated perspectives, I think.
No, I think, Ian, you mentioned all the points succinctly. The one thing I would add to it is that every decision today has to be almost made with the consideration: do you build something, do you buy or invest, or do you collaborate? And across the spectrum of whether it is an ecosystem play or new growth or around resilience of your existing businesses, there's a range of options. But by thinking of every option across these three spectrum, you would be able to spread your eggs across a number of opportunities. Jaxi, back to you.
I think this is all so well said. You know, how do we really build a core, and whether there's activists or not? I think we got to continue to evaluate our portfolios, whether we should carve out, whether we should have a very, very resilient business model. How do we bring the best returns to our stakeholders? And it's so well said. We do have a few more questions. We probably won't have time to answer every one of them. We promise we'll come back. So unfortunately, I mean, that's probably the time that we have. Thank you so much again, Yen, Sram, Maggie, and also special thanks to all of you in the audience, right? We really loved that we have a very engaging audience. That's very important for all of us to learn from each other. So I'll encourage each one of you to really fill out that short survey we have that will pop up on your screen, because we would like to come back and do more of the similar webcasts if you find this helpful, and tell us what you think about today's program. So if you feel that there's others who would probably benefit from this webcast, please do share this webcast through the share this icon. And if you like to have the certificates, which I said earlier, so please submit at the end of this webcast to say that you like to have the certificate, or we can send it to you through email. Well, that's the end of it. Our next webcast is on Australia tax update. Anyway, thanks again for everyone for active participation.
Thank you.